back to the ESPC Property Show. Today we're starting things off a little bit differently. So Paul is in the hot seat.
Yeah, it feels odd. I'm normally sitting there. I'm on the other side of the fence. Well, table.
So later on in the episode we will be joined by two of our solicitor estate agent member firms. Maurice and Lyndsey will be here. But for now we just wanted to chat through our September house price report, so that kind of covers quarter three, which is what we're going to chat with
some months really.
Maurice and Lyndsey about quarter three of 2023. But Paul, I just wanted to chat through, what we're seeing on ESPC side and more of our internal data just for the listeners. So we have seen the average selling price drop. For the last 3 months. It's down 5%. I don't know if you want to chat through.
Yeah, it's a good place to start. As we said, often it's the national obsession. And yes, for the first time, well, not the first time, but certainly the most significant reduction. I think part of this is down to the type of properties that are selling at the moment. And part of that is also being influenced by the type of properties coming to market. So what we've seen is a lot more listings at the lower level. If £200,000 is the lower level. But certainly there's been a bit of an exodus from the lettings market, so more properties that were previously rented out coming to market because there's been changes in legislation, particularly short-term lets with the changes there around Airbnb, etc. So a lot of those properties have come to market that they have sold, but what it's meant is that we've sold less of the more expensive properties and more of the sort of lower priced properties. And as a consequence, we have seen a reduction in the average house price. Safe to say as well, year on year, I think we are now starting to see the impact of the interest rate rises. We always talk about a lag, and that has an impact, I think, on affordability and what people can afford to buy. No real surprise to see that we're selling less at the very, very high end and more at the lower end. You could argue it's a market which is swinging more back to first-time buyers as well, which, as we discuss every time, is no bad thing. Yeah,
and I think hopefully, we've passed that deadline for the short-term lets. Permits licensing that Edinburgh has brought in, so we're maybe less likely to see those short-term lets come to market. That burst has probably come.
Absolutely, I think that's what's happened. We had this, as I say, if you look at peaks and troughs in the market, sometimes it's because something external has influenced the market very quickly, and that's what we've seen quite a bit of. It is quite unique to just the Edinburgh city centre, and particularly we can evidence that in some of the statistics where we've seen a real swing in prices. But it's just it's just the more volume of lower priced properties selling.
Yeah, so that's sometimes where the average selling price can be a bit tricky. But I guess maybe a bit more of a fairer metric would be the percentage of home report valuation achieved, because that's a bit less.
It's more of a guide, isn't it?
Yeah.
And let's be honest here, it's not what it was last year.
No.
Which, again, we always talk about swings and roundabouts. If you're buying and you're selling, it's ultimately no bad thing. Particularly if you're moving up market, you're probably going to bag yourself a better bargain than you were going to get last year. So 4.4 percentage points down last year. Average property now achieving 4 out of 5 are achieving a home report, and the premium is 103.9% of the home report. So premium is still being paid, but we're not seeing that frenzy of offers over, and we're getting 10, 15, 20% over the home report value. We are in some cases. That's this is an average, so we've got some higher, some lower, but overall, as I say, things have settled a little bit. And we're going to come on later and we'll talk about pricing strategy and why pricing is key, really.
Yeah, well, I was just going to bring that up right now, Paul, actually. I think we obviously are very passionate as well about solicitor estate agent, those who are our member firms are, and it's important that you see the right expert when you are selling your property so that they can work with you on the correct pricing strategy, especially in a market like this.
Yeah, and I think if you're buying or you're selling, I think it's absolutely imperative at the moment. No one wants to undersell a property, and equally no one wants to overpay on the one that they're buying, really. And I think where I think ESPC, solicitor estate agents score over independence is just access to data. The registers of Scotland, every house sale that completes in Scotland is ultimately registered, so you can see what price it was bought or sold on the registered site. But that's looking back the way. That data is 4, 5, potentially 6 months out of date. It's sales which were agreed a lot earlier in the year. So if you want really know what's going on right now, you have to talk to the people who are in the market on a daily basis. And those people are your solicitor estate agents that are accepting offers, on behalf of sellers, and they're also making offers on behalf of of their seller who's buying. So they know on a daily basis what's happening, and they've also got access to ESPC's data, which is almost in real time, so they can see exactly what prices properties are selling for. So I would say this, wouldn't I? But I absolutely believe this, that solicitor estate agents just have that finger on the pulse and have access to data that puts them in a unique position to take a real helicopter view of the market and to ensure you're either selling at the right price or ultimately you're buying at the right price as well.
We just wanted to give a little bit of a preamble to the episode with Maurice and Lyndsey, using our own stats, because as you say, they're real-time stats almost. Looking at the last 3 months, these are much more up to date than the Registers of Scotland. Yeah,
definitely. And I think what we should get from the two guys today, I think we'd be really interested to get some real life stories as well. I know Maurice is going to talk to us about his experience of dealing with some landlords of bringing properties to market. We'll hear from Lyndsey as well. So it'll be a good episode that will bring the numbers to life, because at the end of the day, numbers are what they are. You can manipulate the data in any way. So it will be good to get a good cold face view on what's really happening out there. Yeah,
and as you say, there are, of course, anecdotes of people who are completely going over and above our stats.
Totally.
These are,
I mean, one of the most viewed properties just the other day there, it's in Joppa, not from your neck of the woods, and it was the most viewed. It had a phenomenal amount of views and home reports and booking requests and everything else, and something like that's just going to fly off the shelf. So the right property at the right price is still going to attract a significant premium and probably be a bidding frenzy for it. But that I wouldn't say it's the exception, but there's less of them than there were in the last couple of years for sure. And there's more choice. I mean, there's 43.5% more stock available this year than it was last year. So, more choice means that people can take the time a little. They can pick and choose. There's 2 up in a road, so they can take a pick of which one's going to accept their offer, etc. So all these factors, have a play in the market.
Yeah, and likewise, this time to sell is, well, it's slower than last year, but last year was 14 days, which is very fast. It's 20 days. 20 days, So that's
still really good.
Yeah.
And I think the stat which gets overlooked, because we don't actually report this stat, certainly, I mean, we record it, but we don't publicly report it, is the sales that fall through, because it's all well and good agreeing a sale, but ultimately it has to stick. You have to get to missives concluded and ultimately get to the entry date and move in. And I think certainly, if you take a deeper dive into those statistics, what's really, really interesting is the solicitor estate agency model. The fall through is so much lower than it is UK average, which is predominantly estate agents, where something like eye-watering 30% of sales UK fall through. So you agree sales, and ultimately they fall through because there are chains, and there are many other reasons. And I think one of the reasons is solicitor estate agent is involved in not only the sale, but they're also involved with the purchase. So they're just a lot closer to the transaction. And there are times when these transactions do need that TLC. They need communication. They need somebody who's going to hold this thing together, really. And I think in a market like we're in at the moment, there is a likelihood that if buyers get a bit twitchy, the sale can fall through, and that results in all the other sales falling through. So big difference, huge difference there. Yeah,
and hopefully the good news as well, the interest rates have been paused by the Bank of England. I know, because I'm personally trying to sort my own mortgage out just now, the rates are starting, the products are starting to come in a bit lower.
Not sub 4, but sub 5 we're seeing now.
Yeah.
I think certainly the view there was the Bank of England had baked in, not the Bank of England, but the lenders had maybe baked in a 0.25% rise, which didn't come. The Bank of England wanted to pause things, take a wait and see. The economy's pretty fragile, and I think if they go too hard, potentially we tip into a quite a sharp recession, really. So they're trying to balance things, and I think, sort of reading the minutes, it was clearly quite a close call, in terms of the votes. And we review again in November, and we'll see. We might see another rise. They may again take a view to go a little bit longer with the pause. I don't think we're going to see another rate reduction anytime soon, and certainly some commentators are talking middle of next year before we start to see rates come down significantly. That's the base rate. Mortgage products may ease. There's a lot more competition than there was. A lot more banks and building societies seem interested and open for business and are keen to gather business. We heard that from our mortgage guys the other week. So we'll see. But it'll be interesting to see what happens in November.
Yeah, absolutely. So I think that's maybe enough from us.
Yeah, I've probably said too much now.
No, not at all. So we haven't actually spoken to Lyndsey and Maurice yet. We're recording this pre-interview.
10 minutes.
So there might be some repetition, but we hope you enjoy the rest of the episode, and we'll pass over to future Megan and Paul.
Yeah, and we'll cut out most of the repetition.
Exactly. So now we'll hand you over to our conversation with Lyndsey and Maurice. So we're here with Maurice and Lyndsey. Maurice is a managing director of a estate agency at Lindsays, and Lyndsey is head of estate agency at Ralph Sayer. So we're here today to chat about Q3, the property market, and just a bit of a reflection. Our house price report came out this week covering July to September, and we just wanted to chat to two people who are on the ground and actually get to see what the market happening in real time. So I guess just to kick us off, Maurice, I don't know if you want to start us off. How have the last 3 months been in the property market locally?
It's been quite an interesting market. The market's slightly changing from the last couple of years. Post-COVID, there was a real lack of supply across all categories, and now that's evening up, balancing up a bit. So there's more properties coming to the market, or there's a more equal number of properties and buyers out there, whereas in the last couple of years, last 18 months, it's been much more in favour of the seller. So we're seeing now probably more opportunity for buyers to get in there and source their next property, or first-time buyers to get onto the ladder. So it's quite mixed. Different categories of properties are going better than others. Family houses still in huge demand, particularly within good catchment areas. Some of the smaller flats a little bit slower. Much more of some landlords getting out of the lettings market or the Airbnb market, so there's a bit more of that type of stock on the market, and probably slightly less demand for that type of stock. But good quality properties in good areas, as we always see in Edinburgh, are still selling very, very well.
I've been finding a lot of the same, to be honest. What I'm finding is there can be a lot of negativity about the property market, but it's really not like that. I think the main thing is setting your price at the right level, and if you're priced correctly, you will sell. We're not in a market where you can be a bit more bolshy with your prices. Get it at the right level and you'll sell. We are finding there's more flats coming onto the market, as Maurice said. There's more landlords selling up the short-term lets, so there's more sort of choice for buyers there. But family houses, again, still really in demand. So, yeah, and there's a lot of buyers out there, so it's just getting it right.
Mm-hmm. I think that's quite an unusual situation, isn't it, Maurice, where at the moment we've got just the volume of landlords coming to market. Now that's a short-term thing, isn't it, really?
I think it is. It's, as an example, we had one landlord about 2 weeks ago give us 5 properties, literally at the same time. Wow. And that's really down to, not that he didn't want to be a landlord, but it was more to do with the interest rates. So he's coming to the end of fixed rate deals, and his interest rates are going, quite significantly higher, and it's less profitable or not profitable in some cases for the landlords to stay in the market. Especially
if you have a tenant in, I would imagine, that where you can only, there's a cap on the increase. That
exactly.
Put between a rock and a hard place
and we're probably getting a bit political here, but it's a matter for the government really to resolve this somehow. Because landlords, as you say, they're capped at 3% or 6% increases in certain cases. But I had one chap in Leith about a month ago who'd lived in his property while working in Edinburgh, left Edinburgh and rented it out, and he was getting $700 a month in rent, and his mortgage was $300. So that was a nice profit, supplemented his pension, and then he came to an end of a fixed rate deal, and his mortgage went to $900. And he was only getting $700 in rent. So that's the reality out there for landlords. It's not that they're greedy. It's simply that it's not viable for them, or for some of them. Depending on your funding deals. So in that particular case, he had to give his tenant notice because he was losing $200 a month on his investment. So,
that's interesting.
So there's stories like that are kind of real life stories, and some of the reasons why landlords are looking very carefully about what they do and where they invest.
Yeah,
so.
we were talking earlier, and you'd mentioned it there, just about the type of properties that are selling really well still, and we always like. All this is like good hotspots, don't they? Mm-hmm. So if you could name, just reel off 2 or 3 hotspots where properties are selling well.
I think it's the traditional areas that have always been popular. On the south side, you've got sort of Morningside, Bruntsfield, Polworth, the Grange, even out towards Fairmill Head, still very popular with families. On the north side, Trinity, Inverleith, Stockbridge, the New Town, West End. It's nothing surprising, I don't think, about where the hotspots are.
Leith.
Yes.
Crosses
Yeah.
and Leith, that seems to have become really popular as well.
Do you think? I mean, I say that flippantly, but do you think that's a factor?
I think it is a factor. Yeah, I mean, for years everybody's had to put up with it, and it's been the bane of everyone's life. But now, so many people I go out to, they're just delighted. They can just hop on the tram, get into town really quickly. So I think that's really helped there as well. But as Maurice says, it is your traditional areas that are still holding their values and still selling well. There's always going to be a demand.
Yeah, I think you're right. I tell you what we have seen though, it seems to be I always look at, we do this little midweek most viewed property, and invariably it's East Lothian or it's somewhere by the sea.
I was just going to come on to that because again, this is the COVID factor. Post-COVID, a lot of people are working in a hybrid way. They're not having to be in the office every day of the week. So people can now think, well, I can move out to somewhere really nice like East Lothian. I only have to do the commute once or twice a week. Yeah. So they're much more likely to make that move now because the commuting isn't so much of an issue. So absolutely, East Lothian, any of the coastal towns in East Lothian, Aberlady, North Berwick, obviously, even down to Dunbar, are pretty popular now. So we've seen really good results in those areas.
Even the commuter towns in Mid Lothian, people can just say you're not... And they maybe didn't want to commute 5 days a week into town, but now it's 2 or maybe 3. They don't mind it so much, and they can move out of town. They maybe have bought a flat in town before, but now you're getting a house with a garden, your own front door. There's just more for your money. So we're seeing a lot of popularity out of town as well.
Yeah, and I think certainly we did a border special. And they said they'd seen that there, and when we went to Fife,
it's not out yet. Coming soon.
Coming soon. We did a border special and we talk about it in that episode, and certainly in Fife as well. We see bits of Fife. As you say, these things are all, if you've only got to brave that commute once a week or twice a week,
really
everything's doable, isn't it, really? Yeah. In fact, I know on the ESPC board, I think there's a lot of people who live in Fife that come in, so yeah.
Yeah, absolutely. Speaking about, we've obviously mentioned that landlords are, we're seeing quite a lot of their properties come to the market. How have you guys seen a rise in short-term lets, ex-short-term lets come to the market?
I would say at the moment it's more the Airbnb type properties, the very short-term lets, rather than the 6-month or a year tenancies, because that's the bit that's going to get licensed.
Yes. And
the landlords of those properties, they're in a very difficult position because you have to apply for planning permission to change the use of the property into a licensed short-term let, but you don't find out about the result of the application until you've already paid for the application. So a lot of landlords are saying, well, is it worth the risk of me not getting a license? And I think that's the main reason.
And there's certain areas where you think it's highly unlikely now.
Absolutely.
It appears to be the case, doesn't it?
Absolutely.
Really?
I think the council have been very clear on what is acceptable as a short-term let and what isn't. So the landlords with properties in tenement flats, for example, are less likely to reapply. They're more likely to sell. But saying that, it's not a bad thing either. I mean, it does free up stock for the first-time buyers in the main.
And is that who's buying? Is that generally who you find these properties?
It depends where they are. I mean, we've got a number of ex-Airbnbs around the Grassmarket and the High Street and things like that, which are much more expensive than your traditional starter flats. So those properties probably don't come into the first-time buyer category. But there's quite a lot of ex-Airbnbs in the likes of Gorgie, Dalry, Leith, etc., which are affordable and fit into the first-time buyer bracket. But I think it's quite a positive thing as well because it balances up the market a bit. I mean, at the moment, or for the last 18 months, it's very much in favour of the sellers. And both Lyndsey and I work for firms where half of what we do is buying for people. Our solicitor colleagues are submitting these offers and trying to act for our buying clients. And that's been really hard work because it's been very, very difficult. Whereas in a more balanced market, which is actually what we want, it's still relatively straightforward to sell, but it's much more straightforward to buy. And if we can have that balanced market, it favours everybody, really. A lot of people think estate agents only want to see high prices, but actually what we want is a market in which transactions are relatively easy to do both on the buying and the selling side.
Yeah, I'd agree. We have meetings, as you do know, regularly with firms, and it's played us for the last 4 or 5 years. We're sitting there saying, if we have a one, what would we have? And we said more properties for sale. And so this is the year it's come true. We've got 43.5% more stock on the market than this time last year. Yeah. So it backs up what you're saying. There's more stock. On that basis, then, if there's a seller out there listening at the moment, Lyndsey, and they're thinking, I need to find something first, what would you say to them?
I'd say there's pros and cons of both. If you want to secure something before you put your own property on the market, you're obviously at a bit of a disadvantage when you're offering, because you're subject to sale. And what we're finding for some sellers, it's not always about the highest price now. It could be they take the second or third offer because someone's not in a chain. So whilst you understand the nervousness, they could be missing out. And, that gets frustrating and quite disheartening for people. Whereas what we're trying to encourage people to do is, come onto the market, and what we can do is we can negotiate you a longer entry date with a buyer. And most buyers are just so happy to have secured something in this market where they might have been missing out. They're going to viewings week on week. They are delighted. They've got a property. They will wait longer. It then puts the seller in a better position when they come to offer. They're more likely to get an offer accepted more quickly, and the date of entry can come forward for everybody. So it can work that way really well.
Yeah, and I think that's the thing, isn't it? It's not binding at the point that you accept. Mm-hmm. Really, you accept their offer. You're still in control to say, well, I need to find something. Now, we talk about this product Unlock, which is a little bit around that, where it's about having a delayed entry date and getting, being I think the secret is just being transparent with the buyer, isn't it? That, look, I need to find something, just bear with me.
Yeah, and most people are reasonable, and they will work with you. They know you're doing your best, and it just needs to tie in for everybody. We used to say, we're not like the English system with the chains and everything. Well, we are a bit now, but it's just making sure we're in control of that, and there's communication the whole way. Yeah,
and that's, I suppose, the difference, isn't it? Where a solicitor estate agent, it's not just the transaction of the sale. You are very, very interested in what the seller is then doing on the purchase side. You're holding the hand throughout sale and purchase.
Yeah, and most buyers are also sellers, unless you're a first-time buyer. Everybody else in the market is both a buyer and a seller at the same time. So having the same solicitor dealing with both sides of that transaction just keeps the whole thing moving a lot smoother.
Yeah, I guess that kind of, but I was just thinking, as we always say as well, most sellers are buyers and vice versa. In terms of, we've seen that the average selling price on our house price report is reduced. It's down 5% from the same time last year. Is that the kind of thing you're seeing? We've been counting a lot of counting the average decreasing down a lot to just lower value properties selling rather than actual price of individual properties reducing.
I think it's a lot of that, but also a lot of fixed price properties. Whereas, last year, you had a lot of offers over, so you're achieving the premiums over, which is pushing the prices up. Now, because of, say for instance, there's a lot of flats on the market, they might be going to fixed price. There's a lot of people in chains, they've normally got 4 weeks in which to sell, so they might be switching to a fixed price sooner than they would have traditionally, which maybe keeps the prices that little bit lower, I think.
Yeah, and if you're a solicitor estate agent acting for somebody that's on fixed price and you get an offer below the fixed price, what's your advice at that point?
If it's a fixed price, you're normally being pretty fair. It generally is a home report valuation, and I'm not finding too many people are coming in under fixed prices because they're just pleased with the transparency. And that's why we found the new build homes did well, because it's just transparent. I do think there's buyers out there that are still worried about the offers over system and where they're going to have to go with that. And then, because I've seen it, you've changed to fixed price and it's one of the first viewers that comes along and buys it, and you think, where have you been all this time, but they're just nervous about offering because they don't want to be disappointed.
Some people say they just won't do offers over.
So it does open it up to a new set of buyers as well.
I think just back to the pricing and the drop in price, to put it into context, we're not dropping from a low point. We're if you reflect back to 2, 3, 4 years ago, we're dropping from a real peak of a market that was extremely overheated for a couple of years. So we're actually getting back to a more manageable market, a more affordable market, and a market that is, as I said before, much more balanced, a market in which you can transact both on the buying side and the selling side. So prices dropping a little are not a bad thing. And again, if you're if you're receiving a slightly lesser offer for your property when you're selling, you're probably buying for slightly less as well. So it all depends. The way to measure it is the difference between what you're buying and what you're selling. If that gap is enormous, it's very, very difficult. But if you're taking a little less for your property and paying a little less for the next one, it's a much more manageable market.
Yeah.
And if you're going up the market, you're probably gaining more in that situation, aren't you, currently?
Absolutely. Yeah, the people missing out there are probably downsizers. But if you're going up in value and in size of property, which many people are doing with growing families, then it's probably a good time to make that jump.
So you're mentioning that it's a bit easier for buyers now, and I know in the past when we've spoken about first-time buyers, there's a lot of first-time buyers who were, putting in offers on 10, 12, 15 properties before they got an offer accepted. Are you still kind of seeing that first-time buyers, or are they being a bit more successful sooner?
It depends what they're looking for.
Yeah, if you go around offering 50k on £200,000 properties, you're probably still going to be disappointed.
Exactly. I mean, there are some people who are still taking quite a while to find the right thing or to be able to purchase the right thing. But we're seeing the other side of the first-time buyer thing is the mortgage rates. So more fixed prices help first-time buyers more than anybody because they don't have to have the extra deposit. It's tough enough for them to get the first deposit to buy their first property, but if they're then being asked to put more cash up front to pay over the home report value, then that's cash out of their pocket that they've had to save, and that's really tricky. Whereas at a fixed price, they know what their deposit is, they know exactly how much they're paying, and they're more likely to commit at that point.
Yeah. I was asked to comment, there was a question put on LinkedIn the other day, and somebody said, I'm a first-time buyer, should I buy now, or should I just hold off because prices are only going to reduce further? And somebody said, Paul Hill will know the answer. I was like, me? And I just gave my opinion, which I'll ask you to give your opinions first before I give mine. What would you say, Lyndsey?
I think you could wait and wait and wait. And we never know what's coming around the corner. There's a lot of things happen that we didn't expect. So I think you work within the market that you're in and offer what you can afford. What we have to remember, I guess, is a lot of people had their pot of cash saved that they were using to pay over home report. That started getting eaten into with increased rent costs, energy costs, just, going to the shops. It has all gone up. So that pot of cash has shrunk. But if it's a fixed price, they can go ahead. And I think I would always recommend, if you're ready to move, do it now. We don't know what's coming. So,
yeah, I'd agree with that. I mean, I think what I would say is about the Edinburgh market in particular is that even when there's been a downturn, Edinburgh bounces back very, very quickly. Yeah. So it's very difficult to call the bottom of the market. If we could all do that, we'd all be
absolutely
not working. Let's put it that way. So any market it's difficult to call the bottom of that market. So I agree with Lyndsey. I think if you find the right thing and you've got the funds and you're ready to go, then probably no reason to delay. I don't see it dropping drastically. We're not in a situation where back in 2007, global financial crisis. It's nothing like that. Interest rates are higher and costs generally are higher, and inflation is up. But we're not in a very turbulent time property-wise. I think things are pretty stable. They've eased off obviously in the last few months compared to 18 months ago, but I don't see a dramatic collapse of the market. Put it that way. I don't think there's going to be a 15-20% drop and people can pick up absolute bargains. It's not likely to happen, I don't think.
No, I'd agree, which is exactly what I said. I think if it's right for you, if it's the right time for you, and it's not a yes/no decision, is it? Because as you say, it's where you're living at the moment, how much is that costing you? There's lots of considerations, but it's when it feels right. And I agree, the difference is we're not seeing those level of repossessions, and I don't think we will, because we've not seen reckless lending for a long, long time. And as a consequence, I think, yes, it's got a lot tougher for us all, but I don't think we're going to see that abundance of repossessions the way we did, dumped onto the market in 2009. And even then, the Edinburgh market held up really, really well, which was the ultimate test in my view. I think that was a market like we'd never seen, I
think it bounced back as quickly as anywhere in the UK. Edinburgh.
Yeah, and bubble here.
Yeah, and there was no, the mortgage market was almost dried up. There was just no mortgages out there. So, yeah, I think we're in a very different market right now.
Absolutely. So if there was a first-time buyer listening, sorry, I'm just going to stick to first-time buyers for this little part. If there's a first-time buyer listening and they were looking for, let's just say, under 175 to avoid the LBTT. Where would you suggest that they put in their search criteria for on espc.com?
Probably sort of Dalrise, Gorgie, that sort of area.
Yeah, it depends where you want to be. I mean, everyone's got a place to go to work, or where their friends are. What other things are important to you? Do you need a supermarket nearby, or do you have a car and you're happy to travel a bit to a supermarket? All these things about the locality are quite important. So I would say make a list. What's important to you in terms of location, price, number of rooms, etc. And then if you can tick 7 or 8 out of 10, then you've probably done quite well. But I agree with Lyndsey. If you're looking on the sort of west side of Edinburgh, Dalry, Gorgie, the other side or the other end of Princes Street, obviously Leith, Meadowbank, is all very, very central. You're into Princes Street in 5-10 minutes on a bus. So those sorts of areas, and but it depends where you want to be, what suits you. So
I'm finding a lot of buyers have got more of an open mind now as well. In years gone past, they were really stuck on, I want this area or I want this area, but now they're sort of broadening their horizons a bit and just keeping an open mind.
I mean, we're going to do an episode on with that. Where can you get in 30 minutes thing? Because I mean, London, you make your decision and you're kind of in your own little place, and I think Edinburgh, it's entirely commutable. It's walkable. You can be anywhere pretty much, can't you, in 20 minutes, half an hour?
For advice for a
unless you're driving.
I would say buy as centrally as you can, because it's not going to be your final property. It's your first property. You're going to sell it at some point. So the more central you are, probably the more increase in value you're going to see. And then as you get a larger and larger property, you will be moving further and further out.
Yeah, we should do a heat map on that and see, because everyone starts and then, as you say, you go out to the suburbs, don't you? And that's why you get these prices in Morningside and Corstorphine and the like, which we've seen a real increase in. I think the other thing, I think you're right, Maurice, about making that list. Yeah. But safe to say, you're never going to tick all 10 boxes, are you? No.
Well, if you can tick 9, the 10th one that you can't tick is the price. If you've got everything else ticked, the property's probably going to be too expensive. Yeah. So if you can get close to 7 or 8, something like that, in terms of location, number of rooms, how many flights of stairs you want to climb if you're buying a flat, parking, proximity to your work, proximity to the train station, whatever it might be. Everyone has different criteria, obviously, but if you can get to 8 out of 10, you're doing very, very well.
So when you're thinking about selling then, and you're looking to get your property on the market, or even if you're looking to view, how early should you be talking to a solicitor, and when does the meter start running, really? So
the best thing to do is get a solicitor involved as early as possible. You can't buy a property without a solicitor. It's as simple as that. So you will need to have engaged a solicitor, appointed a solicitor to act on your behalf, to submit the offer, to complete all the legal work when the purchase is done. The sooner you get the solicitor involved, the better. The clock doesn't start at all for most solicitors. We don't charge, for example, for submitting offers or unsuccessful offers. The clock as such starts when the offer is accepted and the solicitor starts to do the work to transfer the title of the property into your name. So I would say as early as possible. Lots of solicitors, obviously, within the ESPC framework, more than happy to talk, particularly to first-time buyers who may not know what the process is. And if you're selling, again, talk to agents. Lyndsey's and myself are examples of many within the ESPC. They're more than happy to come out, talk to you about your property, your sale, and put a timeline in place so that everyone knows kind of where they are.
It does make sense. I mean, I remember when I was buying my first place in Edinburgh, and you always get a bit giddy, like that's the one, I'm going to buy that. And I'd seen one property at this point, and remember my solicitor at the time said, just don't get too carried away here. What were you going to offer? And I was thinking of going in. I want to secure it. So you don't need to offer that. Why would you offer? And we're talking 5-10 grand that you save me just by saying, let me just, put your heart to one side. Let's think about your head here. Let's think this one through.
There's so many experienced property solicitors within the ESPC network. They give excellent advice. Yeah. They're there to look after your interests as a buyer when you're submitting an offer. The other thing I would say is get your mortgage funding in place, or at least speak to an independent financial advisor so that you know roughly what you're going to have at your disposal.
Yeah, more so at the moment with question of affordability and the rise in interest rates. That is probably an imperative, isn't it? And again, I would imagine you're going to take an offer more seriously if somebody comes along and you know that everything is in place.
It's a question we ask before people even go to view, you know, if you got your mortgage in principle. So yeah, I would agree with everything Maurice said, get everything lined up, because although the average selling time's 20 days, some things go really quickly. Yeah. So you want to know, you see something, you can pick up the phone straight away, you've got that relationship with the solicitor, you can get the advice. If you've got something to sell, you've had the agent out, you know, we've given you a realistic figure of what you could be looking to achieve, so you know your affordability, you know, for what you can be looking at as well. So you've got everything lined up, ready to go.
Yeah. Okay. So the message is definitely go early.
Yes.
Speak to. It's never too soon.
Just to maybe wrap up, we were maybe going to chat about the next 3 months. What do you think is ahead? Obviously, we've got Christmas in 12 weeks' time, which is a bit crazy to say. I don't know if we've now passed the boat. If you're wanting to look at it, to be in a new home for Christmas, could you still? Is there still time to put your home on the market? Or what do you think the market's going to do in the next 3 months?
Yeah, I think there's certainly still time to put your home on the market if you want to be on for Christmas. And we're finding a lot of things are maybe moving now because people are of that mindset now. If I don't do it now or in the next few weeks, I'm looking into next year. So I think, there's certainly still time to do that. I think we'll continue to see things moving. I don't think there's as much seasonality in the market as there was years and years ago. You know, you can still be sitting in December negotiating offers and it doesn't slow down the way it used to slow down. Yeah. So I think as long as people are being realistic, they will still be selling. And things seem to sell all year over. So I think we'll continue to see fixed prices just with the number of flats. And that being said, I was looking at, our sort of past sales for the past couple of weeks, and you're looking at 8%, 7%, 5%, 4%, 8.5%. So there are still good sales happening. So it's just about getting the right price and the right marketing.
I think with regard to do you sell now or do you wait, or do you buy now? Again, it comes down to if it's the right property. If you see the right property and it's for you, go for it. And if you're buying subject to sale, that means just get yours on. The average selling time is still, I think, 20 days. So it's, if you look at that in context of the rest of the UK, it's incredibly quick. It's less than, it's almost bang on 3 weeks on the market before an offer's accepted on average. So we're only at the beginning of October now. You could have the property on the market in a week's time. You could have it sold in 4 weeks' time, if your property goes in the way that the average suggests. So you've got a sale in early November. Yeah. Agreed. Yeah. And then the entry date can be,
negotiated from that point, can't it? And we do see, certainly if you get into December and you're unsold, we do see those properties that are paused over the Christmas festivities, shall we say, for a week or two, where it's no viewings. That's not uncommon, is it?
No,
really?
Not at all. And I think, as Lyndsey said, it used to be much more seasonal. There was a very, very hot spring market and then a very hot sort of September, October market. And a bit quieter in between, but certainly the last few years we've been selling right up to almost Christmas Day. Offers have still been coming in. There's no reason if it's the right thing and the right time for you, then it could be December that you make your move.
It's interesting, isn't it? Because I think the 1 month this year that I think we have seen things a little quieter was August. I don't know why that was. Obviously it's a holiday, peak holiday, and maybe children going back and people had other things in mind. But it's the 1 month. We looked at our statistics and web traffic and page views and all the other key metrics that we would look at. I'd say that was a month where we have seen.
Yeah, we were looking back at that just a few weeks ago and comparing this August with the previous August, and we were, quite significantly down in terms of number of sales and number of offers received. But then it bounced back incredibly quickly in September, and we ended up having a phenomenally busy September. And October so far is looking pretty positive as well. So there's always sort of ebbs and flows in the market. It's not that August has to be this number of sales and September has to be a different number. It does ebb and flow a bit.
Yeah, I'd agree. But we did say that, didn't we? Is this seasonality, or is that if for the year as it lights off? And clearly, I think what we're hearing is that September's come back strong, and we are predicting that the run-in's going to be pretty good to the end of the year. Really good.
Perfect. Well, thank you both very much for coming on the podcast.
Thank you.
That was a really great chat.
Yeah, thanks guys. Appreciate that.
Thanks so much.
Cheers.